All right, you guys, pretty short video today. Happy New Year, everyone. Doug McKay on the 30th of December, 2011. The overall trend in the equity markets for the second Friday in a row, we have it as long. We'll start out with the Dow, down 72 basically at the lows for the day, down below that 12,250, but still the overall trend is long. We will sit up in our seats if we break 12,000. If it breaks 11,750, like we've been saying for several weeks on a close, we would be out. But we definitely would be sitting up in our seat with a close below 12,000. Any close above these highs that we put in this week would be bullish. That would increase the odds of 12,005, 12,750. When we flip over to the S&P cash, let's see, where did we close today? 1257. Did get that close, above the downward sloping trend line. We're above the 30-day. We're above the 50-day. We are basically right at the 200-day. All three of our indicators point up. We think the odds favor 1,300 before a print of 1,200. Everybody's making predictions for 2012. They're all just guesses. So let's throw my guess in there. I think it's going to be quite some time before we get above 1375. But I do think we will eclipse or at least hit 1300, 1310 sometime in January. We will be watching 1228. If we get through that, we will again either be very, very defensive and hedged one for one, stop the bleeding, so to speak. If we were to break 1200, very similar to 11,750, at that point we would be short the S&P and or long bonds. Speaking of bonds, some of the bigger accounts we do still have or have added back in, jump back into IEF and then also TLT. As we mentioned yesterday, both bonds and equities were moving together. For our purposes, it's very important, you guys, to trade what we see, the charts. If it's above the 50, if it's above the 200-day, if it's above the 30, if it's coming out of a base, or it looks like it's about to come out of a base, we like to chart, regardless of the news. That goes for everything. Gold, the dollar, the euro, bonds. So at this time, even though we have this topping formation in the TLT and the IEF, it is trading above major moving averages, and we do have this basing pattern and a stop that's fairly tight. So we're going to go with bonds at this time, in addition to equities in the larger accounts. What about gold? Playing a bounce here is acceptable. Again, if you were, I would have my stop both on silver and gold, basically at the lows that we put in yesterday. Similar chart to what we've been talking about the last couple of weeks. We see a potential bounce to 160, possibly to eventually fill this gap. Again, looking at the charts, do I think that this is a low in GLD? Probably not. It could be, but I don't think that it is at this time. Again, going back to the NASDAQ, still trading below the 50-day, still trading below major moving averages. Therefore, we still have a position in the PSQ in the managed accounts, which is short the NASDAQ 100. I will disclose to you that we have a tight stop on that, a hard stop of 31.14 that was put in the accounts today. All right, you guys, wrap it up. The overall trend is long in equities. Bonds look decent. Trade what you see. Stick with the moving averages. Only buy stocks or ETFs that are breaking out of basis. We'll see you guys next week on the blog. Thanks.